Stop everything you are doing right now and close your other tabs because this is not a drill. What I am about to reveal is not speculation or another false alarm. It is a confirmation of a system failure that the financial world is desperately trying to keep quiet. By the time the mainstream media picks this up, it will already be far too late for you to react. For massive institutional banks quietly pulled out of silver trading operations this morning. They didn't stop because of a technical issue or routine maintenance. That is the kindergarten explanation they give to the public. They stopped because continuing would have exposed them to losses so devastating that their own risk systems literally forbade them from taking another trade. While you were sleeping, the paper-silver market cracked wide open and the biggest players grabbed their chips and walked away without looking back. Check your screen right now and you might see a silver price of $71 or $72, but that number is historical fiction. The internal data and the behind-the-scenes panic represent the most significant signal the silver market has produced in 4 decades. These banks exited because they are terrified that the mathematics broke and their models failed. At 6:15 a.m. Eastern Time, institutional trading desks went dark, meaning they stopped accepting orders and stopped quoting prices entirely. This is the financial equivalent of a restaurant locking its doors during peak dinner hour and refusing customers. It wasn't just one bank having problems. It was 4 major institutions simultaneously, while gold, platinum, and copper continued trading normally. Do not believe the press releases about systems upgrades or capital reallocation that will eventually surface. The silver trading desk depends on one fundamental assumption: that enough physical silver exists to balance the paper contracts. That assumption just shattered because registered silver inventory has been in freefall, dropping from 50 million ounces to just 38 million in 6 weeks. Total open interest on silver futures represents 900 million ounces of paper promises, but only 38 million ounces of real metal are available for delivery. That is a ratio of 23 to -1. For every single ounce of real silver, 23 paper claims exist on that same ounce. This isn't a market. It's a structure built on the assumption that you will never ask for the metal, and that assumption is breaking down right now. In Japan, silver bars are changing hands for $130 while exchange quotes show 71. The bifurcation has begun. If a bank is short 10 million ounces and the physical market gaps to 150, their loss is $790 million, an institution-threatening catastrophe. Risk management looked at this scenario and gave one instruction: stop trading immediately and reduce exposure to 0. When liquidity in financial markets evaporates, it becomes a death spiral of volatility and forced exits. Meanwhile, the physical market is experiencing a supply panic, with refineries running at maximum capacity and mints reporting 8-week delays. Industrial users are no longer ordering just in time. They are ordering just in case to avoid shutting down their factories. The paper price might surge to match the physical price, or the exchange might declare force majeure and settle everyone in cash. If the exchange runs out of metal, they will invoke emergency clauses to cancel trades and protect the institutions while destroying the traders. We are watching a managed retreat where the smart money is exiting while they still can. The system that has existed since 1971, pure fiat currency backed by nothing but faith, is dying, and silver is where the death is visible first. Imagine a margin call at 2:17 a.m. on the 48th floor of a Manhattan tower where the line simply goes quiet. JP Morgan doesn't miss margin calls. They receive them from everyone else. But when a bank is solvent on paper but starved for actual transferable dollars, the unthinkable happens. When a giant is cornered, its death spasms dictate the price, causing silver to gap higher in chunks of $5 and $10 at a time. Trust, not money, is the real lubricant of the system, and in this story, trust vanishes in a single morning. A failing megabank isn't always bailed out. Sometimes it's bailed in, and your bank balance is converted into worthless equity. Your life savings could be sitting on the same table as high-stakes speculators without you ever knowing it. History is brutal on people who confuse feeling prepared with actually being prepared. In 1920s Germany, the family with the velvet pouch of a few coins survived for months. But the family that stacked consistently bought land for pennies. The crisis didn't make them rich. It simply didn't wipe them out. and that made them look rich afterward. Most silver stackers are tourists in a storm who buy high and panic during a 20% correction. Insurance is only useful when it is sized to the risk you actually face. Central banks are sending a signal by adding 1,000 tons of gold to their reserves. They are reducing their dependence on their own product. Physical metal removes counterparty risk. No banking system or app stands between you and your asset. Your first milestone is 50 to 100 ounces, the survival stack that lets you sleep at night. The second level is stability, 300 to 500 ounces, where silver becomes a structural anchor in your financial life. The third level is legacy, 1,000 ounces or more, something tangible to be handed down with intention. Don't be like the person who buys once, gets excited, and then lets life take over until the opportunity closes. Silver doesn't work as a one-time decision. It works as a boring, repeatable behavior that becomes part of your routine. Every year you sit entirely in cash, you are silently losing ground to a unit of measurement that is quietly being diluted. The time to prepare is when no one cares, when it feels boring, and when there is no excitement attached to the decision. History is full of days that people said could never happen right up until they did. Real value endures, and when the moment comes, silver won't need belief. Reality will authenticate it. Stay vigilant, stay disciplined, and remember, the goal is not to own the most silver. The goal is to survive the transition with your options intact.